Hey everyone, it's Julie here with TipRanks, and today we're taking a look at top analyst tech stocks that are unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 tech stocks that come in with a unanimous strong buy consensus from Wall Street, including some recent buy ratings from 5-star ranked analysts. We're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. We found today's stocks using the top analyst stocks page. Found right under the top of the Ideas tab over on the TipRanks website, here you'll find a collection of companies that have gotten ratings from 5-star analysts recently. You can sort it by market cap and sector, so we narrowed it down to the technology sector today to find our list below. You can check out the top analyst stock page for yourself over on the TipRanks website or by downloading the TipRanks mobile app. Links will be in the description down below. Just before we get into today's stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our strong buy tech stocks. First on the list today, we're looking at CGI Group. They trade under the ticker GIB, currently priced at $112 per share. They did see some ups and downs this past year. Overall, they're up 11%, and in the last 3 months have gained 3.8%. CGI Group is an IT and business consulting firm, helping their clients best utilize technology to improve their businesses. Founded back in 1976 and headquartered out of Montreal, Canada, CGI is among the largest IT and business consulting services firms in the world. Some of their services include strategic IT and business consulting, systems integration, managed IT, intellectual property, application services, and infrastructure services. They serve a wide variety of industries, including communications, insurance, banking, manufacturing, transportation, energy, and more, and manages delivery centers across the world. And just last week, on November 6th, the company did share their fourth quarter earnings report, where we saw both an earnings and revenue beat. For their Q4, they reported earnings per share of $1.38, which came in 1 cent ahead of analyst expectations, and revenue of $3.66 billion, which also beat estimates and grew 4.4% year over year. Looking at the full year revenue of $14.68 billion, grew 2.7% year over year. Management said they were pleased with the results, and looking forward to 2025, they continue to see opportunities to deliver on their full offering value proposition. The CGI Group has 6 current analyst ratings, and 5 out of those 6 analysts recently increased their price targets. The most recent came from a 5-star analyst at Canaccord Genuity. They noted the strong fourth quarter results that beat modestly across all major metrics, and top-line growth being 4.4%, which is an improvement despite continued pressure on discretionary IT spend, largely impacting the consulting business. And of course, as you know from the start of the video, all 6 of those current analyst ratings are a buy. And that strong buy consensus comes with an average price target of $128.57, implying an upside potential of 14.6% from current prices. Looking at those ratings down below, it's actually a pretty tight group of price targets here, our low end being an upside at 12% and the high end being an upside of 18%. Moving right along to our second stock, we're taking a look at CyberArk, which we did touch on back at the start of the summer. They trade under the ticker CYBR, currently priced at $293 per share. They've climbed 56% in the past year. We chatted about them back around the start of June. In the last 3 months, the stock is up 6.3%. CyberArk is an identity and access management, or IAM, security tool. They help organizations protect against unauthorized access and malicious actors. Their PAM system helps reduce the risk of privileged accounts by providing a secure way for IT units to access and use them, and also includes built-in auditing and reporting. Their identity security platform offers services such as discovering and onboarding, centralized admin, and identity threat detection and response. And they have a wide variety of other proven measures like access control, 2-factor authentication, encryption, firewalls, and VPNs to help protect companies against hacks, attacks, and other cybercriminal activities. They just shared their Q3 earnings report literally this morning before market open. And for their Q3, they came out with a big earnings beat and a revenue beat and an increase to future guidance. They reported Q3 earnings per share of 94 cents, beating expectations by 48 cents per share. Total annual recurring revenue grew 31% year over year to $929 million, while subscription revenue grew 43% year over year. Their total revenue came in at $240 million, beating estimates by over $6 million and increasing 26%. The company raised their full year guidance across all metrics and also outperformed their guidance across all metrics during this quarter. Leading up to this quarterly report, we had a handful of analysts weighing in, including one analyst from Scotiabank who just initiated coverage with a buy. The analyst argues that CyberArk is at the top of its game competitively and think that the momentum can continue. The street top-line estimates for the second half of 2024 and 2025 appear reasonable based on the firm's positive checks and the continued tailwind for the company's software-as-a-service transformation. And so far today, following that Q3 report, we've heard from one 5-star analyst from Robert Baird. They reiterated their buy rating on the stock, noting the impressive financial performance and upwardly revised guidance, and furthermore, the company's strategic acquisition of Venafi expected to bolster future revenues. Despite their upcoming CFO transition, the planned succession suggests stability in leadership, which combined with their solid financials supports the buy rating. Overall, CyberArk has 12 current analyst ratings, all coming in with a buy. And their average price target comes in at $332, implying an upside potential of nearly 12%. Looking at our ratings down below, our most recent price target here from Robert Baird is our high-end price target with an upside of nearly 20%. Moving further down for our low-end price target, it is this 6% upside from back in September. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Third on our list is another company we talked about, this one in August, that is NICE. They trade under the ticker NICE, or NICE, currently priced at $198 per share. Overall, in the past year, they have gained 11%. We chatted about them back at the start of August here. In the last 3 months, they've gained over 19%. NICE provides cloud platforms and software solutions for businesses. They provide a range of customer engagement solutions, financial crime, and compliance solutions. Their unified open cloud platform, CX1, manages 100% of customer interactions, tens of millions of conversations every day, from voice to next-gen digital and AI chatbots. They help organizations create CX by addressing consumer and employee expectations, and their approach includes AI, journey orchestration, smart self-service, and more. Their next earnings report actually comes out tomorrow, so one to maybe keep an eye on, and it does follow a strong Q2 earnings and revenue beat back in August. For their third quarter, analysts are anticipating earnings per share of $2.68, and this follows their Q2 earnings per share of $2.64, which beat expectations by 6 cents per share. Revenue came in at $664 million, beating by over $1 million and growing 14% year over year, and the company also raised their full year 2024 earnings per share guidance. And ahead of that earnings report, today we heard from an analyst at Citi. They bumped up their price target, saying that when looking at their Q3 results setup and ramps to accelerate growth in Q4, they see stronger underlying business trends and pipeline commentary at NICE versus Zoom Video. Their optimism on NICE stems from fieldwork, which highlighted healthy large deal momentum and an uptick in competitive wins. The NICE stock does come in as a unanimous strong buy based on 11 current ratings. And their average price target comes in at $264, implying an upside potential of 33% from current prices. Looking at those analyst ratings down below, our low-end price target is $230, which would still be an upside of over 15%, while our high-end price target is that one from today, with an upside of about 68%. So that is a quick look at 3 top analyst tech stocks, all coming in with unanimous strong buys. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.